Hello traders, Gary Wagner here. It is 12:40 in Honolulu, 6:40 in New York on Monday, 23rd day of September 2024, and this is the evening report for gold and silver. Gold futures advanced today by $6.30. That's a net increase of 0.24%, closing out December gold in New York at $2,653.40. Trading in Australia, gold is off by $1.40 from New York's close, currently fixed at $2,652. We are approaching a price point that could act as technical resistance. We will cover that when we pull up our technical studies. While gold did have a moderate gain today, the same cannot be said for silver, selling off by 1.54%. That is a net decline of 48.5 cents per ounce, taking the most active December contract to $31.49.5. Trading overseas, silver is up slightly, a gain of 1.5 cents, taking December silver to $31.02.5. Gold's gains were able to overcome moderate dollar strength today, with the dollar gaining 0.18%, taking the index to 100.984. Gold continues to surge and break records, even though today's gain was moderate, with a gain of about $6. However, we are quickly approaching a price that could turn into an area of technical resistance, along with a couple of studies that are showing us that gold prices currently are overbought. The first level that we are looking at as major technical support occurs at around $2,560, and that is based upon a series of tops that started in the middle of August and ended in the middle of September, when we had a $50 day take gold well above that price point. The second level is a more recent level, which we are labeling as minor technical support, that comes in at $2,600 per ounce, a key psychological level. In terms of our current levels of resistance, we can't use former tops or bottoms, which is a major tool that market technicians use to identify key levels of support, such as this particular double bottom here that occurred in June, or the series of tops that we recently had at around $2,520. The first thing that we can use are a couple of oscillators. I have just put up our stochastic oscillator. The stochastic oscillator is a range-bound momentum oscillator, and in essence, what it is designed to display is the location of the close compared to the highest high or lowest low over a defined period of time. Typically, the stochastic oscillator is used to identify either an overbought or oversold market. When we look at the stochastic down below, it is composed of two lines, the %K and %D. The %K is the percentage of the price at closing within the price range of the number of bars used, called the look-back period. The %D is a smoothed average of the %K. We look to see when markets become overbought, the stochastic oscillator will move above 80, and we look for the blue line to cross below the orange line to indicate a potential correction in the market. When we look back to the example in the middle of May, the 17th, we can see that the oscillator peaked above 80 when gold was hitting a top at around $2,490 and did in fact come down. On the 17th of July, we had a similar occurrence. It forewarned a potential correction in the marketplace. However, There is a caveat to using a stochastic oscillator as a standalone indicator. It must be used with other information, because there are also scenarios, as we've recently seen beginning on August the 20th, when gold was trading sideways, where we did have a cross occurred not only once but twice. And what happened was, a few days later, we had another major break to get a new record high, which is why you would always combine a stochastic oscillator with other technical studies to confirm that, first, gold is in an overbought scenario. There is a possibility that gold will find resistance right above this current price point and begin to trade lower, which is why we are looking at this daily candlestick chart with our Elliott wave count, projecting the potential for gold to rise as high as a 1.618 extension at $2,665 and conclude this primary third wave. While it is too early to draw that conclusion, the combination of stochastics being overbought and the fact that gold's price is now approaching a 1.618 extension of wave 1, we will have to see how gold trades throughout the week, if it is able to effectively break above $2,665, or if gold trades a little higher and finds resistance and begins to trade lower. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.